Happy birthday. Now let's move to the top headlines from the startup world. AWS says cloud services restored after a major outage at Amazon Web Services takes down several online services, including Amazon, Alexa, Snapchat, Roblox, Fortnite, Perplexity, and others. The cause of the outage is currently unclear. The Ahmedabad bench of the National Company Law Tribunal admits insolvency plea against Blue Smart Mobility Tech, a subsidiary of Blue Smart Mobility. Lepton Software filed the case over a 5.84 crore rupee default for Google Maps based geospatial and API services used in the EV ride, hailing platforms, mapping and routing system. A 38-year-old engineer working with Ola Electric has allegedly died by suicide. An FIR has been filed naming CEO Bhavish Aggarwal after a complaint from the family. Ola Electric has moved the Karnataka High Court, challenging the basis of the FIR. Relief for WeWork India's proxy advisory firm InGovern claims Bengaluru-based workspace operator has addressed governance concerns. It adds that promoter equity infusions reflected confidence in the business. The shares continue to trade below the debut price. E-commerce platform Meesho files updated draft papers with SEBI for IPO, featuring 4,250 crore rupees of fresh issue and OFS by major investors such as Elevation Capital, Peak 15 Partners, Y Combinator and others, along with Meesho co-founders Vidit Atre and Sanjeev Kumar. Those were the headlines that we're tracking for you this evening. But on what's brewing today, India's clean energy push just got a major boost this Diwali. iOS GPS Renewables Private Limited, a joint venture between Indian Oil Corporation and GPS Renewables, has raised $95 million in debt financing from Indian Bank, the largest single bank debt raise ever in India's compressed biogas sector. The funds will help build 9 CBG plants across 4 states using paddy straw as feedstock to produce renewable natural gas, and using paddy and straw as feedstock to produce renewable natural gas and cut down on stubble burning. What makes this deal even more significant is that it's the first fully non-recourse loan in this sector, reflecting strong confidence in India's circular economy and biofuel potential. Now, joining me now to discuss this further is Parag Parekh, the CEO of GPSR Arya and Group CFO GPS Renewables. Parag, here's wishing you a very, very happy Diwali. Thank you so much for joining us on the show today. So let's get to the first question that we have for you today. As we head into this festive season, a time that's all about light and renewable, how do you see IGRPL's work in the biofuels and circular economy space contributing to a cleaner, more sustainable Diwali for India?
So thank you. Firstly, thank you, Arundhati. Thank you, CNBC TV 18. As well as wishing all of you, your families and the viewers a very, very happy Diwali, a great Samvat and a new year. Coming back, I think, on to the important milestone of this financing, let me first give you a background of, what GPS and what IGRPL is. GPS is a full-stack biofuels entity, primarily focused on compressed biogas. And it has actually done one of the largest municipal solid waste biogas projects in the city of Indore. Further, it has done in other technologies, and as we speak today of paddy straw. So this is GPS Renewables. GPS Renewables also has an asset platform called Arya, GPSR Arya, taking advantage of the continuing growing momentum, the thrust that the government has been giving on initiating and encouraging more and more biogas projects. So that's where Arya is. Now, Arya and IOC have actually formed a joint venture in developing multiple CBG projects. The first of these kind are 9 such compressed biogas projects, 4 of them located in Haryana, 3 of them in UP, and one each in Chhattisgarh and AP. And all these 9 projects put together are being initiated in a joint venture of 50-50 between IOC and Arya, the asset platform of GPSR. When we ventured into this, we certainly, then looked at tying up and having a financial closure for these 9 projects. And we got a very, very encouraging interest. This encouraging interest allowed us to, look at tying up close to 95 million, about 836 crore in Indian rupees. And it is one of the first such large financial tie-up as far as the compressed biogas sector is concerned.
Absolutely. And each plant is going to use paddy straw as feedstock, right? So how does
Yes.
your technology ensure efficiency and scalability in converting agri-waste into biogas?
Sure. So out here, as I said, paddy straw is the feedstock that is being used, and the lignicide component of the paddy straw is being used with a technology of an anaerobic digestion. And through this anaerobic digestion, the compressed biogas is being produced. All the 9 projects put together, each one is going to be looking at doing 15 tons per day. So that's the capacity of each of these plants, and all 9 put together, it will amount to close to about 135 TPD. So that's the size and scale as far as this is concerned. And this technology of GPSR, along with the strength of IOC, which I don't need to really touch upon much, but theirs, along with GPS's technology out here, has really enabled the financing sector to get comfort, and which is why we've got it on a non-recourse basis.
Absolutely. And what kind of revenue potential do these 9 new CBG projects unlock for IGRPL? And over the next few years, how do you see biofuels contributing to Indian Oil and GPS Renewables' overall clean energy portfolio?
Right. So the good part of this is, Arundhati, that this is a sector which has a very, very small implementation period. So we should see all of these projects getting implemented in FY 2027. So all these projects will get commissioned across by the end of this FY 27 financial year. And this allows us to establish a lot more projects as far as CBG is concerned. So when we are talking about IOC, whilst there are being tied up as 9 projects for now, we are in conversation to actually build this platform much larger. So hopefully we would be tying up another close 10 to 11 projects soon, and that would mean 20, and the intention is to go further. Why the intention is to go further? I think that there's a very strong government thrust on encouraging compressed biogas projects. And to that extent, some of the larger oil marketing companies are looking at setting up these compressed biogas projects. For somebody like GPSR and ARIA, as both, providing, the technology for the EPC becomes very, very important. And that's where, as I said, it is tying up with these OMCs. As far as the revenues are concerned, from a purely a GPSR basis, it's an EPC entity, and it will look to doing the EPC works for each of these entities. Besides that, as a ARIA, as a developer platform, will actually generate revenues from sale of this compressed biogas. All the 9 projects put together approximately are close to 1,200 crore in terms of the total project cost.
Sure. And you mentioned plans to build a nationwide network of CBG plants. What's the roadmap? How many more projects are in the pipeline, and by when, if you could quickly tell us?
So as I said, there are multiple plans, and many of the OMCs organizations are wanting to set up this. And to that extent, as I said, immediately in terms of IGRPL pipeline itself, we are looking at adding another 10 to 11, and a lot more further than that. There are other OMCs also who are expressing interest onto building compressed biogas projects. And the good part as far as GPSR and ARIA is concerned, that GPSR actually provides the technology and is an EPC contractor. At the same hand, at ARIA, which is the developer asset platform, it actually contributes in putting a 50% equity as a partner into these projects.
Sure, absolutely. All right, Parag, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best with this new venture.
Thank you once again, and wishing all of you a very happy renewable natural gas Diwali,
Absolutely.
as well as stay safe, each one of you and your families. Thank you.
Thank you so much. All right, moving on. A 38-year-old engineer working with Ola Electric has allegedly died by suicide. An FIR has been filed naming CEO Bhavish Aggarwal after a complaint from the family. Ola Electric has moved the Karnataka High Court challenging the basis of this FIR. Rachna Dhanrajani is here with all of those details. Rachna?
Ola Electric's chief executive, Bhavish Aggarwal, has been named in an FIR after a 38-year-old engineer allegedly died by suicide. He has been named along with one more official of the company, Subrat Kumar Das, who, according to his LinkedIn, heads vehicle homologations and regulations at Ola Electric. Now, K. Arvind, who had been employed with Ola Electric since 2022, was found dead at his Bengaluru residence on the 28th of September. Investigators say a 28-page note was recovered from the spot. It refers to mental stress and blames company executives, including the CEO. The document is now part of the police evidence and its contents are being verified. The complaint filed by his brother and father alleges that Arvind had faced sustained workplace pressure and humiliation while working at Ola Electric's head office in Koramangala, Bengaluru. Now, the FIR also records that just 2 days after Arvind's death, that is on the 30th of September, a payment of about 17.5 lakh rupees was made through NEFT from an Ola Electric account to his bank account. That transaction, and whether it was routine or an attempt to settle dues posthumously, is under investigation. The case has been registered under Section 108 of the Bharatiya Nyaya Sanhita, which deals with abetment of suicide. Police say the investigation will also focus on establishing causation, verifying the handwritten note and electronic communication, and tracing financial and managerial responsibility. Ola Electric says it is cooperating with authorities and has questioned the basis of the FIR, maintaining that there were no prior complaints against the executives named. But this is the second death by suicide linked to an Ola Group company in about 6 months. In May, a 25-year-old machine learning engineer at Ola Krutrim, that's the company's AI arm, was also found dead in Bengaluru, with family members and former colleagues alleging work-related stress.
Well, moving on, it's Diwali, the festival of lights, wealth and goddess Lakshmi, and a platform inspired by that very name. Lakshmi is helping women take charge of their money. Financial platform for women, Lakshmi has launched Lakshmi Pay, India's first UPI just for women, turning everyday spends into wealth-building opportunities. Lakshmi Pay rewards users not with cashbacks, but with digital gold. Joining me now to tell us how Lakshmi Pay is helping women spend smart, save better and grow their wealth is Preeti Rathi Gupta, the founder of Lakshmi Pay. Preeti, welcome back to Startup Street and wishing you a very happy Diwali. Also, many congratulations on the launch. Let's start with the big idea. Why a women-only UPI in such a crowded payment space? And how did you shape Lakshmi Pay around the unique financial habits and needs of women? Take us through what Lakshmi Pay offers.
Great. Thank you, Shruti. And you're right. What better day than Diwali, the festival of Goddess Lakshmi, to launch something that helps every woman become better at creating her own Lakshmi or becoming a Lakshmi herself, right? So, UPI has now become ubiquitous, right? It's a fabulous payment infrastructure, which can actually become a catalyst for different use cases, different cohorts. And today, frankly, if one solution worked for everybody, ideally we would have seen an uptake across, age, gender, socio demographic, classes as well as geographical locations, right? So there is enough space to use UPI as a catalyst to service different sorts of people, right? And for us, Lakshmi is solving for women. I think the uptake of their financial products and their wealth creation. Simple, women engage with money differently. They are cautious, thoughtful, and value-driven. And I think we build Lakshmi Pay to reflect exactly that, the relationship with her money. So the way women spend, save, invest, borrow, all of that is very different than it is for men.
Yeah.
Now, we always say, we've said that Lakshmi Pay is not just UPI, it is UPI for her, right? It's a digital platform that rewards her for every transaction.
Preeti, that brings me to my next question. What really stands out is that Lakshmi Pay rewards users in digital gold, not cashback. How does that work, and how do you see it changing the way women think about money management?
Absolutely. So I think women, like I said, are very cautious. Even when she's spending, the top of her mind thought is actually saving. Can I save more money when I'm spending, right? And that's what that insight is what helped us craft this solution in a way that even when she's spending, right, we are taking that onus. Lakshmi Pay takes that responsibility of saying, we will help you spend smarter, which means that firstly, we will get you savings in places that you spend. Second, every time you spend, you also, in terms of, if you get a 2 rupee, 5 rupee, 10 rupee cashback, that typically goes in your cash, and you don't really, it's not something that you're genuinely saving, right?
Yeah.
So here we are saying, okay, we'll give you small amounts of digital gold. Now that gold collects on the app. They can redeem it if they want, but we also encourage that let it grow in value as well, right? And the third thing that we do, Shruti, is actually, as women, we love budgeting, we love hisab kitab.
Yeah, yeah.
But we find it extremely dreary. Right? How do you do this? I can't do it every day. We're short. The one thing that we are short of is time. So what we've done is embedded a budgeting tool so that when she's spending, we're helping her save more. We are helping her, create some amount of wealth, but we are also giving her literally like a nudge, or create a sort of idea for her to understand where she's spending more. She can put in filters. She can say, I want, this amount of spending. She can put in limits, all of that to actually help even save for the future.
Preeti, when it comes to payments, security and trust are non-negotiable. What safeguards have you built into Lakshmi Pay to make sure that users feel confident transacting?
Because it is, literally built on the UPI rails. So it's completely compliant with India's most secure and used payment infrastructure, right? But over and above, we've actually, because you're right, we're building for women. I think one of the things that they really worry about is that what if my money gets lost, right? What if there's a fraud? So we've actually built a multi-layer authentication, a real-time fraud detection, and literally like a bank grade encryption on the app, right? But we also go beyond tech, right? Which is, a lot of literacy there's an in-app education. Digital literacy actually is one piece that there's a huge gap, right?
Yeah,
yeah. So getting that to them, sharing, doing sessions on that, scam alerts, safety nudges, all of this, right? So it's not just digital security, it's also about the emotional assurance that your money is in good hands.
Absolutely. And like you mentioned earlier, Lakshmi already offers savings, investments, and a thriving community for women. With Lakshmi Pay, Preeti, what kind of partnerships are you looking at with banks, fintechs, or women-led brands to expand rewards and reach? What's next on the roadmap for Lakshmi Pay?
Actually, what really happened after we, once we had gone through all the certifications and then we started talking to partners, we actually realized that because of that huge gap that exists in servicing women, right? One is financial services, whether it is banks, whether it is, lending, all of these looking for partners. I think now we've become the go-to because we already have, close to 15 lakh women on the platform. But the other very interesting piece that actually, which was an aha moment for us, was we realized that even on offers, for example, where women spend money, whether it's food, fashion, beauty, we actually realized that itself, a lot of platforms did not have gender aggregated data. And we realized that today we have the ability, if we can get in the best offers for our women, to actually create value for our partners. In terms of really channelizing that traffic towards a platform which gives them offers, as well as bring that huge value proposition to our women as well. So I think we've right now partnered, even on the e-commerce piece, we partnered with 5 large players to get, our women the best offers. But obviously that line has now suddenly become very long because we've had, it's a very mutual beneficial relationship with a lot of partners out there.
Well, my final question, Preeti, on this Diwali of wealth and empowerment, how do you see Lakshmi Pay transforming women's financial independence in the years to come? If you could share with us some of the growth targets that you've set for yourself.
There are easily about 400 million women that can be financially included. And when I say financial inclusion, it really doesn't, it goes beyond credit, right? We're not just talking about credit. True financial inclusion is when a woman can access all financial tools that a man can access, whether it is to save, it is to grow her wealth, or to, invest. All of these she should be able to access. And I think that's what Lakshmi as a platform aims to do, right? And Lakshmi Pay becomes a big catalyst. I think for us, the first milestone is to get 2 to 3 million transacting women on the platform, and we have, of course, a target of reaching 200 million women who, over the years, will use Lakshmi as a platform to do all things money, and which is why we've even our tagline, which is "Money made for her," should stand true, where everything that she thinks of when it comes to money, she has a solution. It's an integrated platform that she can go to.
Well, with that, it's time for me to wrap up our conversation. But many thanks, Preeti, for joining us today on Startup Street, and wish you the very best with Lakshmi Pay. And once again, wishing you a very happy Diwali.
Thank you. Thank you, Shruti.
Well, on that note, it's time for us to head into a short break, but don't go anywhere, as there is lots coming up on the other side.
Welcome back. You're still with us on Startup Street. Pune-based deep tech material science startup Without recently raised $1.9 million and announced a first-of-its-kind demonstration plant that can process up to 5 tons of unrecyclable plastic waste per month. Rashna Dhanrajani speaks with founder Anish Malpani and investor Dia Mirza to know Without's growth plans and more. Take a look.
Can it be made without? That's the question this Pune-based startup is answering by creating innovative products like these sunglasses that are made using chips packets. Joining me now is the founder and an investor in this company. Thank you so much, Anish. Thank you so much, Dia, for joining us. Anish, first start by telling us, how do we get here? How did we make sunglasses using chips packets?
So when I was researching the impact space, I came across the waste problem. And I found that waste is not only do poor people collect waste, but waste collects the poor. And I realized that all waste is not the same. Certain types of waste are way worse. Turns out that your chips packets, your chocolate wrappers, while it's very tasty and all, is really hard to recycle because it has multiple layers associated with it. So we decided that we want to work on real problems. And so we created technology that can separate the layers and extract materials. And then we're like, okay, what do we do with these materials? And we're like, okay, let's make sunglasses, because we didn't want to make like boards and furniture. Everyone's doing that. We wanted to show that there's actually high quality applications of this material possible. And then the second part, which is really important, is that there are close to 25 million urban poor in India, out of which about 5 million work on waste picking. And if we're trying to solve the waste problem, you can't leave anybody behind. So how do you formalize and incorporate these former waste workers and bring them into the equation? And that's also what we do. So we're probably the only idiots in the world doing deep chemistry and deep social inclusion. And we're lucky to have investors.
The world needs many more idiots like you and like Without.
No, but we're very lucky to have investors like Dia and like our other impact investors who truly believe in what we do and are patient about it. Because we're not starting a nonprofit, because I think nonprofits are hard to scale. We want this to be financially viable, but we just need some time and patience because this is hard. We're breaking systems and we're reimagining them.
So first, let's start by talking about the technology that goes behind it. Chips packets are supposed to be the hardest to recycle because of the metal that comes into it. What is the tech that goes behind it? And when you separate it, if you can quickly take us through the process of.
So it's a chemomechanical process. So it's a water-based reaction that the chips packet go through. First it gets shredded and washed. And then it gets delaminated, demetallized. Some of the PET, which is a polymer, gets depolymerized into its monomer. It gets partially decolorized, and it also goes through a hot caustic wash. All this happens simultaneously, and all of this is what we've patented. Um, Once that's done, we get building blocks and raw materials, which we then take those building blocks and raw materials and convert them into high quality materials. And all this happens using chemistry and physics, and a combination of those, keeping unit economics in mind.
And then there's maths that now you take us through of being an entrepreneur.
Yeah, for sure.
Take us through your funding journey. We saw you on Shark Tank. Now you have Dia as an investor. Tell us more about your cap table and the funding round.
So it's been difficult, to be honest, to find the right impact investors in the space. And over the last this round has kind of closed now, but it's been, as Dia will say, like 2 years in the process. Of lots of ups and downs, and we're finally closed around. But what we've not compromised on are the values. We've not wanted to sell ourselves out. So yeah, I mean, it's a big round. I feel very lucky, and I feel like the ball is in our court now to be able to execute on this.
What's the plan forward?
So this is the first demonstration plant that we built that proves that this technology can scale. The next step is to build our first commercial plant, which is slated for next year, and this handles like 5 tons a month. We need to be doing 5 tons a day. So that's when you're really solving the problem. But you can't get to that until you do this painful step.
Right. Dia, I'd like to come to you to understand how did you become a part of Without. We've seen you growing up in movies. We're still watching you everywhere. Still growing. Still growing. But on social media as well. Tell us about this side which we haven't seen yet, which is to be an investor, to be a part of a cause, which is also a business.
So as a sustainable development goals advocate, one of the things that I've really been trying to steer people's direction towards is to recognize that the goals are personal. And I feel that Without is a perfect example of how sustainable development goals are personal. And if you actually look at practically every aspect of the solution and the components that come together to form the enterprise that it is, every goal fits in so perfectly and so beautifully. And so as an SDGs advocate, I believe that because the goals are personal, it's so important then to empower those who've made the goals personal. And for me, investing in companies has always been about putting my money behind what I believe in.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side.
India's festive season sales have wrapped on a high, with e-commerce platforms registering a 24% jump in order volumes and a 23% rise in gross merchandise value this Diwali, as per data from Unicommerce. E-commerce platforms led the way, reporting strong festive numbers. Amazon, for instance, said its Great Indian Festival 2025 saw 276 crore customer visits, the highest ever. Premium smartphones, large screen TVs and other consumer durables led the sales with double-digit growth. Categories like fashion and beauty also saw up to 95% growth, especially in Tier 2 and Tier 3 cities. India's festive season sales have wrapped on a high with e-commerce platforms